us a little bit about delayed financing, like the broad overview, like what is it and how does it function?
Yep. So delayed finance is basically when you use an asset, whether it's your own money or a loan from your retirement account, home equity line, or even a promissory note from somebody to go purchase a property with cash, fix up the property to where it's in now a rentable condition to where we can send an appraiser out there with that there's nothing wrong with the property essentially. And then we will basically provide you back with your project cost, give you back your project cost up to 75% loan to value of the appraisal value now. So example, just go through some quick math. You buy it for 60, you put 15 into it. So your project cost is 75,000. And then it's worth 100,000 when you're done. You literally could get a loan for 75,000 or 75% of what the appraisal value is once you're done doing your rehab.
Now, is that that sounds fantastic. Is that a normal mortgage, like a 30-year fixed, 15-year?
Yep.
You just pick whatever type of mortgage you want and
it's
just
a
jump in.
Regular 30-year fix.
That's great. So is there, because it's delayed financing, or the style of financing is different than just a normal mortgage you buy, are the points different, or is there more, the interest rates higher just because of the type of loan? Is it similar?
Yeah, well, there's an adjustment because it is considered a cash out because you now own that property free and clear because you used another asset to buy it, because the key with delayed financing is there cannot be a lien against the property when we refinance it. So we literally have the attorney do a title search. There can be no liens against it. So it is a adjustment in the pricing of a cash out. So it's a pricing mechanism essentially. Yeah. So it is a higher rate than what a purchase, if you just bought it straight, if you just did a purchase transaction, you would get a little bit better pricing than it being a cash out.
Got it. So let's walk through it step by step. So number one, let's say I have cash, but let's pause that. Not a lot of people have a lot of cash. So let's say they have their home equity, their equity in their home, and they want to do a cash out refinance. Would they start with you to do a cash out refinance?
So if on their primary residence, a couple things they could do. They could borrow equity from their house, which, yes, you could do a cash out refinance, which guidelines right now with certain credit scores let you pull up out to 85% on a primary residence, 85% of the appraisal value on your primary. Or if you have a good rate, because rates were lower a couple of years and you don't want to, change the difference there, you can go get a line of credit from a local bank and basically just have your line of credit. There are some banks that are actually going all the way up to 100% of the value of your property right now. And you could use that line of credit for your, per se, business. Let's just call it a business of buying rental properties. You would basically borrow the money from the home equity line to purchase let's just say our subject property that we're talking about. So that way the lien is actually against your primary residence and not against the property we're going to do the delayed financing on.
That sounds great, because I've done this many times where I bought properties with cash, but then I had to wait 6 months, seasoning. So before I can actually pull the money out, and I didn't do delayed financing. I just literally had to wait and then have an appraisal come through and all that sort of stuff. So tell us a little bit about the thinking that now we don't have to wait. Like, why do we not have to wait 6 months like we normally would?
Right. That's the good caveat with the delayed financing. And the whole thing is there's no lien against the property. That's what makes the delayed financing, because literally, we've got people that have come in, bought it, fixed it up within 2 to 3 weeks. We started our process of getting the appraiser out there, did our paperwork, and they had their money back in about 15 to 20 days. So wow. The good part is with delayed financing, they can take that same, just say it's the home equity line, because what happens is if we see that it's borrowed money, which your home equity line is borrowed money, even though it's your own asset, we pay the home equity line back, which pays it back to zero, and then you can go do it again. So as quickly as you can acquire them, get them rehabbed, we get the appraiser out there, we can get the money back in your pocket. And so generally, just say a 45-day time cycle from start to finish, you can roll that, 4, 5, 6 times a year to get it within a 12-month time period.
That's great. So are there more lenders out there, more mortgage brokers that do this, or is like a specialty niche that only a few of them know how to do it?
It's available to everybody. Me and Lee, the gentleman that you referenced, we probably about 5 or 6 years ago kind of went through. So I'm a true mortgage broker. So it allows I have different investors, which is good because especially working with investors, we have lots of different options. We kind of presented this to one of our investors. Hey, if we go at it from this perspective of, putting the project costs onto the settlement statement, will that still qualify for delayed financing? And we put it through and they were absolutely fine with it. It fit into the guidelines. So it's available pretty much. It's just somebody's got to be able to understand it and know how to do it. So I've really, we've made it our strong point for the last probably 6 years of which investors are okay with it, and because here's the guidelines that it fits into.
So do you have a few different, like you don't just have one bank that if they just say no, you're kind of out of luck. Do you have other banks or other investors that would be able to be okay with it?
Yeah, being a broker, I'm literally signed up with 50 plus banks, but we do business with about 5 of them on a normal daily basis. And we haven't had any issues with any of them.
Oh, that's great. Very, very cool. So delayed financing sounds fantastic. Now, do you have any other thoughts since you do mortgages as well as you work with investors at the same time? So delayed financing is one tool in an investor's tool belt of how to build the business faster and build it well. Any other thoughts of how we can invest and use mortgages in a creative way that we would normally not have, like just regular mortgage or delayed financing? Is there something else that we could look at or maybe think of?
Yep. So here's the things with, delayed financing. The most financed mortgages you can have right now for Fannie and Freddie is 10 finance mortgages. So once you've done this and you've got 10 finance properties, you're kind of up, okay, what do we do now? So at that point, we basically kind of switch gears, and there are what's called debt service ratio loans, where they literally use the cash flow of the property to support the transaction. So they don't actually get into your personal liabilities and what your income is, because these are now structured as commercial transactions. And you literally will hold them inside of an LLC. Now, you're still going to personally guarantee it, but you will now hold it inside of an LLC, and it's based off of just the cash flow of the property. And there's no limitation of how many of those you can do. And you can do them as individual properties, or you can do a blanket over multiple properties and literally create yourself mini REITs. And you can get 30-year fixed rates on those. You can also get ARMs and, those kind of products.
That's terrific. Now, because I've done blanket loans in the past where you definitely the bank requires that the properties be put into an LLC, so it's in bank's or the business name. So right now, I really like how you said that they do have 30-year loans, because that was my question, was because the one that I have, it's a 5-year fixed, and then they renew and they do another 5-year fixed. So it just constantly changes, and I'm not sure. I'm not the biggest fan of that, because something might happen. Market crashes, whatever. Yep. And rates just skyrocket. So I'm not a big fan of that, and I'm not a big fan of just adjustable rate mortgages in general. So I personally like being a single family home investor, a 30-year fix. I know exactly what's coming out of my pocket, or out of the tenant's pocket, because they're paying the bill. So if I do, like I do have, let's say 4 properties that are in a blanket loan right now, and if I wanted to refinance it to a 30-year fix, so I just bring it to you and say, hey, these are the 4 properties. This is how much profit it makes. Help me out.
Yep. Basically, we just do all appraisals on all 4 of them. You can actually pull the cash out of them also if you wanted to. Depending on credit score and loan amounts can determine how much we'll lend you. But you literally could take all those properties, put it to where you have one mortgage payment every single month. It includes taxes, insurance, everything like that. And it's just securitized by all 4 pieces of those properties.
That's great. So if anybody has any properties that do not have any liens, like a home equity loan, a regular mortgage, like if it's basically a free and clear without any liens on it, you can lend money on that property.
Correct. Yeah. And that's actually one of the bigger things we do is we've got investors right now that, have really worked hard on owning them free and clear, and they now don't have their W-2 job, and they're trying to figure out how to keep doing it. So basically what we do is we sit down with them what they're working with, and we'll go and do a cash out on those properties that they own free and clear, the ones that they want to bundle together to create that mini REIT, give them the cash to now they can go buy the next properties free and clear, fix them up, get them all rented, and then we duplicate the process and just continue moving the bucket. Every time they get them, completely rented it up, we just go back, give them the cash again, and they just go find the next deal.
That's fantastic. I've done it many times. I love that process because my business builds so much faster when I'm using other people's money like that. It's just absolutely fantastic to do that. So any other types of tips or thoughts of how to get financing and be able to use something like you, Patrick, to, hey, I can't get, didn't get, or I'm not able to get a regular mortgage or something like that, but what, any other options that come to mind?
No, I mean, I will tell you that a lot of the banks, I mean, they're captive to their rules. They have their overlays. So, of course, being a broker, I'm a strong advocate of brokers because we do have multiple options that can get things accomplished. So, if the deal makes sense and you've got you've paid your bills like you should have and your credit's at least decent and you've got some assets to work with, there's generally a way that a broker can find a way to get it done because the capital markets have really come back over the last couple of years of trying to put their money to work, and they're being really aggressive with their rates. It's not like it's 15, 16%. I mean, you're down literally, without getting into rates, I mean, you're generally about 2% to 3% higher than what you could get a 30-year fix for going full doc. So it's not crazy rates by any means.
Yeah. For a cash out loan, somebody might say, well, I know I could get a mortgage for 3.5%, 4%, 5%, whatever it might be right now. Why would I want to pay 2% more? Well, it's just that's what it costs in order to do a cash out. It's totally different ball of wax for banks. They're seeing cash come out. So yeah, I think that's absolutely terrific. So what are your thoughts of, with the blanket loan? If somebody had, I don't know, let's say 20 properties and they have 10 of them that are free and clear, is there any limit to how many properties they can put under a blanket loan? No,
it's unlimited. I mean, the bigger the loan amount also, the better terms you're going to get. So sometimes it's better, and that's where we kind of go through the properties. Because a couple variables get looked at. I mean, what's the value of the property gets, the individual property, because the investors have minimums of what they want those values to be worth. I mean, they don't want a $40,000 property in there, but we look at it. I mean, that's just the thing of sitting down with a professional and just trying to figure out what's the best way to get the best deal based off of my portfolio of things. Because, when you put these in these blanket loans, because they're capital market deals, they do have prepayment penalties on them. I mean, that's why they're doing what they're doing. But generally, prepayment penalties are 5 years. They're not any longer than that. So like with a 30-year fix, you're going to have a 5, 4, 3, 2, 1. But after 5 years, you're able to do what you want to with it.
Got it. And for people listening and watching this, it would basically be like if you, after 2 years, wanted to refinance again, that's a prepayment. Like you're literally paying off that loan again, so they're going to have that prepayment penalty. So, that's great. So 5 years, that's really not that long to hold a bunch of properties and hold that note, especially if you have a 30-year note. I mean, every time you refinance, it could be good if you have a lower rate, but if you refinance, if it's to help your business is good, but the downside is you start that whole interest clock all over again, which is a downside, but it's the cost of doing business. And I've done that so many times, and I've made so much more money because I started that clock over by pulling money out and buying more properties with it. It's just a great way to go, because most people don't have cash just to put down on a property. You start with a mortgage, and then with that mortgage, then you pay it down, or the tenant pays it down as you have it rented, and then you have a little equity. Time goes on, and you make the property better. You pull money out, start that clock over again, but at the same time, you can buy another property to make even more money. Does that sound like the right path to go?
Absolutely. I mean, it's basically, I mean, what we tell people, especially with the 30-year fixed product, go ahead and lock it in, because that way, if you don't have that strategy, at least it's guaranteed. But after that 5 years, because generally every 5 to 7 years is when people make their moves. I mean, it's just a natural cycle that at least it gives you that option that you can now go pull that cash out, go do your next deal, and then go from there.
That's great. So if somebody wanted to work with you, are you just in North Carolina, or do you have other states that you work with? Do you know anybody else that we can work with you on?
Yeah, so as a residential broker for the 1 to 4 units, that's North Carolina, but I'm a network of many brokers across the country. So it's just a matter of, if somebody emails me, we have a whole list of what brokers are in what states that we can always introduce them to. From a commercial standpoint, that's actually unlimited. Every state has its own requirements. So there are certain states that we can't operate in, but every deal is different. So it's not like a straight residential world. We're only North Carolina. We can tell you what a 30-year fix is. It's just a matter of contacting us. If we can do it in the commercial side on one of our states, we'll be more than happy to. Otherwise, we'll introduce you to somebody that can do in that state.
That's terrific. So next question goes along with the lines of the ability to get financing. I have a lot of people that listen to the podcast and watch the YouTube videos, and they're from out of the country. Like I have students that are, Switzerland or the Netherlands or just other places, like even in Afghanistan. And so have you come across anybody from outside the States to try to and invest in America, buy a property cash, and then refinance it? Do you see any hurdles with that, or is that possible?
We have, so you're talking not U.S. citizens,
Correct.
What you're asking. On our residential side, I can tell you that we do have loans for foreign nationals and ITIN loans and stuff like that. So those are available for financing because you can only do those as investment properties and second homes.
Wow. What's the ITIN number? What was that?
ITIN? Yeah, basically it's somebody that's actually here that doesn't have a social security number, but they've registered with the government and have been filing their taxes under an ITIN instead of a social security.
Oh, I get it. Okay, that's what. Yes, I've come across that. So, what if somebody lives in another country and they're not actually living here?
Yep, it's called foreign national loan.
Right. Very, very good. So, if somebody wants to do the commercial lending with you and they're a foreign national, there shouldn't be too many problems, right? It doesn't sound like.
Being a broker, we have all these different sources. So that's the difference, that we're not just captive to one bank's rules. We literally have access to lots and lots of different institutions that are trying to put their money to work.
That's fantastic. So there is definitely a way for outside basically non-U.S. citizens to be able to invest in America. And I think that's fantastic that we have the ability to do that, because I have quite a few people that are really just, man, I'd love to invest, but where I'm living, like, let's say Greece or Switzerland, like they literally have like generational loans. Like the loan passes on from generation to generation because it's so expensive. And like, well, I want to get cash flow. I'm thinking one student in particular, I'm trying to help them to get started in here. And so this is great. I'm really, really glad that I got to talk to you. Now, thinking about North Carolina, as we're wrapping up, I was thinking if somebody were to work with you in getting a residential property in North Carolina, is there any area that you would not say this is a great area, but like maybe, hey, take a look at this area, like Raleigh or another place. Like, is there any area that you would suggest that you can get a property for $60,000 to $80,000 and do what you're talking about?
For that price range, I mean, we have Fort Bragg, Fayetteville area. We have Jacksonville, North Carolina. There's Goldsboro. I'm just thinking of the military institutions because generally that's where you're going to have a lot of those areas, essentially, where there's a lot of turnover because people coming in, people moving out, and also the support staff that support the military. It kind of keeps those prices relatively down. So here in North Carolina, those are kind of the areas there. I mean, once you start getting into Raleigh, Chapel Hill, Durham, I mean, things are going up. Those are big technology and education areas. And then Charlotte, North Carolina being a big banking. Once you go west of that, you're into the mountains, and you'll have those price ranges, yes, but it depends on whether you're looking for, is it a good rental area? Because there's got to be something there that keeps them there. Most people in those areas own their properties because they could be generational properties.
That's cool. So in September, I'm actually going to be over in Florida, driving up to Washington, D.C., just sightseeing as well as looking at properties. So I'm going to take your idea and look at some areas and try to hopefully find some properties out there. So that's really good. Great insight.
Good.
Cool. So Patrick, as we're wrapping up, I definitely want people to be able to find you and to be able to utilize your services and then your network as well. As they can point people, you can point people to different brokers in different states if you're not able to get it done, which seems like you're just about everything you can. How can they reach you? How can they find you and get a hold of you and contact you?
Best way to do it, I mean, we have our website is mcmortgagegroup.com. Visit us on the website. You can also reach out via email. My email address is pstoy@mcmortgagegroup.com. Those are probably the best two ways for people to touch base, essentially.
Got it. Now that's great. Now I'll also have this in the show notes in the description as well, so anybody else can get there and they can just click on the link and go right to you guys. But Patrick, thank you so much. It's been really informative, and it's been super awesome to see that there are other ways to get properties and creative ways to use your financing and other people's money to get and build your business even bigger. So thank you very much.
Thank you, Dustin. I really appreciate it, man.
All right, man. Bye.
Take care. Bye.